Hello friends, this is Raj Sastry from Raj Option Trading. Today is September 11, 2022. Hope you're all doing well. In today's segment, we'll take a look at how to make money and earn a great living just by trading 5 ETFs, especially options on those 5 ETFs. So with that, let's jump in and get started. Look, from a market perspective, we have here S&P 500 or ES as we call it in the futures market. Look what's going on here from a direction perspective. It's channeling down, so it's basically trending down. And same story with Nasdaq. Nasdaq is trending down in 2022, and same story with Dow Jones Industrial Average as well as Russell 2000 all trending down. And the market is hostage to Fed and high inflation. And these days we don't need to worry too much about individual stocks unless they're big stocks like Amazon, Tesla, Apple, Nvidia, and so on and so forth. But otherwise, we should focus mainly on these big ETFs and big stocks. Otherwise, you'll not be outperforming the market. So with that, I expect the volatility to continue for months to come, and in 2 weeks Fed is going to meet again, and there will be one more drama around the rate. Most probably it could be 50 basis points or 75 basis point price increase, and market will roll over at the time if the market is heading up by the time this occurs. So with that, we got to be careful. It's a very choppy market. That's why don't be a one-sided trader. Trade both sides of the market to make money. So with that, let's jump into a spreadsheet and look at the ETFs. Look, from an ETF perspective, I got here a spreadsheet that I normally compile to make sense out of the market. Look, we got here big ETFs. We got SPY, one of my favorite. Look, from a SPY perspective, it's a leader when it comes to open interest in the option market and also volume. Look at the open interest here, nice and high 20 million open interest. That tells you option holders are holding and their positions on the 20 million SPY options. So that tells you folks are holding on to it. They are not selling or closing the positions. So that's a very decent volume, very good open interest. And then there is a good option volume. This is option volume is as of Friday. On Friday itself, we got 9 million options traded. That's a good option volume. And look, there is a call volume here. Folks are buying call, folks are buying put. But look, put volume is more. That tells you folks are hedging their bet and buying more put options. So that way when the market rolls over, they can make some good money. That makes a put call ratio as 1.34, as you can see here. And this is one of my favorite ETF to trade. And for the folks who have little higher account size, they can trade SPX, which is also one of my favorite. And then you got QQQ. QQQ is also one of my favorite ETF to trade. And look here, we also have few more details here, and I have got ATR. Look at the ATR in both SPY and QQQ. In last 14 days on a daily basis, these big ETFs are going up and down by 6.95, 6.91. That's a pretty decent ATR. Don't go after low ETFs, that's not worth your money. And then you got IWM and XLE. These four on top here, those are my favorite ETFs to trade options and make some good money. And I also look at few more. I look at SMH, which is also one of my favorite ETF. Look, SMH has got a nice and high ATR here. Look, 6.91, almost 7. ATR is almost close to QQQ and SPY. And also look, we got XOP here. This also has got a nice and high ATR. You could do that one also. But in short, my favorites are really SPY, QQQ, IWM, and XLE. And I also go with SMH. So these 5 ETFs, you could make a killing trading those up and down and go from there. And also look, there is a nice open interest. So you're not trading a illiquid asset. These are very liquid, as you can see here. So with that, let's jump into Thinkorswim platform and look at how to trade SPY in this market. We'll take one example of SPY. You could apply the same thing to QQQ and IWM, XLE, as well as SMH. So with that, let's jump into the platform here. All right, so we got here Thinkorswim platform from Charles Schwab or TD Ameritrade, and you could go in here, and one of the best way to look at what's going on is to make some trade. You could go to on-demand platform, which will basically tell you when to. You can go to previous date here, and you can make some trades. As you go into on-demand platform, let's give it a minute. It will pre-buffer for a while. It puts me into September 8, which is I think last week. So I will say I will go into maybe say August time frame here, just to trade some of these ETFs options and go from there. I just randomly go into maybe say August 1st and see what's going on here. So it's buffering on August 1st here, and in the meantime let me go into the chart and look at the chart. All right, so let's go into chart here. And as you look through the chart here, we got, let's see here, chart is coming up. And let's go into a one-day type chart just on Excel, just on SPY here. All right, let's go to 1.5 here. And let's bring up SPY. All right, so we got SPY here. And let's do one thing. Let's go here to just a little bit smaller time frame here and go from there. All right, I'll go right here to 1.5 years. As you look through here, it's 18-month. Look, right now, let's go into SPY here. All right, so we got SPY here. As you look through here, SPY, we got here, it's starting to go higher as of now. And look, RSI, perspective RSI is hitting the top, as you can see here. And as RSI goes higher, what I would do is really, I would, basically, either do a put or even I would do a call spread. I would sell a call spread. So with that, as RSI is hitting on top here, as you can see here, and looks like money is flowing into the market, folks are a little bit bullish. But because RSI is hitting the top here, I would go to here, right here, and I would say so we got multiple time frames here. If you're a swing trader, I would say go into a little bit smaller time frame for swing traders. Especially these ETFs are very liquid, as you know here. You could go into 19th of August or even 36th here. I would go into this monthly expiration. That's good enough. So what you could do is really, stock price is 411 here. You could click on and open this and look at few more details. And look, I would because stock RSI is higher here, I would go on top here, keep watching the delta here. Delta, I want to go around delta, say 10 or 15. Look, we got delta here around 16 coming up here. Nice volume, and I would go somewhere there. Right now ETF price is 411 and we are at delta 15, as you can see here, with the nice and high volume. So if you're a daredevil, you could just sell a call option here and collect $1.82 or so. But what we'll do is really, let's look at spreads and go from there. So you could do a nice spread here. If depending on your account size here, you could just go here and look at 445 or even say 440, 430 spread here. I will go here and sell a spread here at the top here. My thesis is market is hot. It went up, so it will come down. So we will sell a vertical spread here. We are selling at 440, as you can see here, and we're buying back at we could buy back at 450 and see how much money we'll make. Look, we are making 72 cents. You could even be a little more aggressive. Instead of 440, you could even sell at 430 here. Let's see, let's go to 430 here, 430, and you could do here instead of 450 do 440. So that way you are taking just a $10 risk, as you can see here. Not too much risk you're taking, and for this you're collecting $172. Good enough for me. You could go and confirm and send. All right, so what we have done is stock market is hot, and we are basically selling a call spread at the top. It's a defined risk strategy, so you don't lose your shirt. So let's go and send this. And what we could also do is we could also take advantage and sell some put option, buy some put option, and go from there. Look, stock price is at 410 here, and you could go here all the way around 410 here. Look, we got 410. We are paying around $9 here, and we got 411 and so on and so forth. So right now what I would do is I will go to 412 here, and I would also look at the open interest. Look, there's a nice open interest. I would do right here with a nice and high open interest here. I would just buy this put option at this price here and go from there. All right, I'm paying $9.60 buying this put option and confirm and send. All right, so we got our put option is bought. Looks like our call spread. Let's see what's going on to our call spread. Probably it's not bought yet. It's still working. So looks like it's 169 here, and let's actually reduce our credit to 168 and go from there. All right, so we change it to 168. Hopefully it will be filled, and good. So this also got filled here, and what we'll do is here we'll look at a couple more days. We'll advance to let's go into our monitor tab here, and let's see what's going on here. Look, we got SPX SPY option, and let's bring it up, open it up here. So we got a SPY here. Let's also go to single, and we got SPY here also. Look, we got put option here that we bought, and as of now we are losing some money. As you can see here, we got call spread that we bought right now. So what I would do is I would advance to next day here. Instead of August 1st, let's actually go to August 5th here and see how our positions are doing. All right, it's pre-buffering. Let's give it a minute and see how our positions are doing in 1 week's time. I love to give some time to these options, so that way these can really work and make money for us. So look, we are 5 days out right now on August 5th right now, and look, our vertical spread here, that's the call credit spread. It already made us $25, as you can see here. And we got our SPY put options that we bought. Looks like the put option did not make much money yet, mainly because look, stock price went higher. So what I would do is I would advance it a little more here, and go from there. What we can also do at this time, look, we can go into this into our chart here. As you look to the chart, look, stock is doing pretty well, as you can see here. So what I would typically do at this time, since it's going still higher, I would double down on my sell side, and I would buy one more put option here. So what I could do here I could go into 412 here. Look, we already have a put option right here at 410. Right now it's 412, so I would go right here 412, and look, there is a 100 open interest here, and I would even go a little higher here. Look, there's a nice open interest. I would buy one more put option right here and go from there. Look, we are buying a put option here because market is becoming too hot. And as you look through here in the chart, we just looked at the chart. As you look through the chart here, look, RSI is really topping off here. It's showing some strength, showing some resistance level. It might come down. So if you're you can also do one more thing. We already have a call option open, call position open here. You could double down and buy one more. Look, 412 here. We have got here 430. I would even buy one more of the same thing here and go from there. Look, we got 430. And look right here. So I would buy one more here and go from there. I would even be a little more aggressive here. I would do say 435 and 425 and go from there. Let's go to 425 this time around and buy a call spread. Actually sell a call spread here. All right, so we are selling a call spread. We are selling 425 and we can buy back 435. It's a $10 wide spread, as you can see here, done. So we have we are actually doubling down on our negative thesis here and go from there. All right, so we got it filled also. So now let's advance to one more week here and see what's going on here. So we are going from August 19th. We could go into, let's go all the way to September here and go to September, say, just randomly say September 5th here, or just after the Labor Day, September 6th here, and see how our position is doing. All right, let it buffer and we'll see how it's give it a few more minutes here. All right, so we got two call spreads, as you can see here, that we sold. So we brought some money by selling them, and we also have two put that we bought here. In this market, it's good to buy also. Folks always tell to sell options. It's also good to buy options. Look, we got our vertical spread. It's making $168 here, and we got one more vertical spread making $226. What I would do at this time, it's I would just close these open positions here. Look, it's September 6th is the expiration date. We are actually on the expiration date here. I would close these right here and make some good money here. I'm making 168 plus next one here I'm making around 226. Good money here. I would just close this and go from there. Look, we are closing it right here. And I would just put 1 cent, so it closes here. We are buying back at 1 cent, not a big deal here. Confirm and send, done. And we'll do the same thing here. We'll close this one also here and go from there. All right, let's make it 1 cent. All right, so we got our put positions here. Let's see how it's doing. Look, our put positions here, we got a put at 410 making almost $929 is a nice price here. The second put position is making around 1,405, and we could close these put positions also. We are making a good killing here, just waiting probably say 3-4 weeks and making around 2,000, even more than $2,000, around $2,500 just by trading SPY. You could do this all day long. So as you see here, we could go back here. Look what's going on here. As you look through the market here, let's go here and look at the chart. Look at the chart here. As of now, stock is trying to fall down the cliff here. Look, stock is falling. As the stock is falling, one of my favorite strategies really, do both sided right now. Because it's falling, I'm willing to buy. So what I would do right here, I would go here to SPY and do same thing. I would not don't want to go too far out here. I would say, go. Typically, I love, these. I love these monthly expiration cycles, and even weekly is good on SPY. You could go into maybe 10 days out is also okay here. You could just go here 10 days out, and because ETF is falling big time here, you could go here around the current stock price 390. Let's go here to 390. Look, we can pay just $7 here and buy this up right here. I would just pay $7. I made some good money already. So let's go and buy this SPY $7, almost 693 here. That's good enough. I would just send it here. We bought a call option here. And because market is falling here, you could also sell some put options, so make some money that way too. So what I would do is, really, current price is around 390, as you can see here. Puts are very rich here, making you some good money. I would not be too greedy here. I would go right here 365. That's good enough for me. Or even I would go 370, 30% probability of touching here. I would just sell it right here, make some money here. All right, confirm and send this. Market came down. What we did, we basically bought a call option, and we are trying to sell a put option, make some money here. Look our orders. Let's see what's going on here. Let's see. Okay, so we got filled orders here. Looks like let's look at the open orders. We got closing orders. That's fine. I think our orders got filled here. Let's look at our positions and go from there. All right, from a position perspective, we have a single SPY. We bought a call option here. Look, we got 390 call here. That's one. And we also sold a put. I think our put option that we sold looks like that did not get filled here. That's fine. Let's go with the call option and go from there. Let's try to sell this put again and see where it is at. So put is right here. It's 10 days out. So we are going to sell this right here. And let's try once again. All right, so this put is not selling. That's fine. Let's go with the call. And what we'll do is we'll go a couple more days here. We got September 9th, which is Friday. Let's see how we are doing. All right. Look, we are in, it's buffering. Let's give it a minute. All right, so as it's buffering, it's very important to play both sides of the market, especially market is very volatile. If you just play one side, you miss out a lot. So with that, look, we got here, we sold this call option here. Let's see, 390 call option here, 7 more days to go. We just sold it 10 days to expiration. Look, we already made around $1,000 here. You could close this out here, and we tried to sell some put option here earlier. Looks like our previous put option is still making us money, but it's making some good money. So with that, what I want to stress here, always look at the chart, and when the market is going up like this, gangbusters, don't worry, sell some call option at the top and buy some put options, so that way you take advantage of it's falling down. As you see, market is falling off here. At this time, you would be buying call option or even call spread for that matter, and go all the way down and buy some put options or put spread, make some money as the market goes up. So always watch out the RSI here. Look, really, relative strength index, as it's getting strong here. This is when you can buy some put option and sell some call option at the top, make some money. As it falls over, this is when you can buy call option or call spread or sell some put option way below, make some money. So that's why it's very important to trade both sides of the market and make some good money. This volatility is really very good. It's an options trader's paradise. So with that, hope this helps. Thank you very much. Please subscribe. Happy investing and trading.